Carter has presented something to me that I never really understood that well before, this concept of what he called swing trading. There was a time in my life when I used to day trade, and people understand different levels of trading or different time frames for trading, etc. He literally has written the book on and mastered this concept of swing trading, and he feels it's something that you can learn about too and that you can succeed in growing your money with. So watch my interview with John Carter. You're going to find it very interesting. John, thanks so much for being here with us today.
Awesome to be here.
So tell us your career path. What was the timeline to get you to where you are?
So the condensed version, the shortest version is that, so I was a senior in high school and my father was a stockbroker. And I came home one day after working an entire summer at a cookie store where I made $4.25 for each hour that I worked. And so I'd saved up about $1,000. And when I came home, he and his friends were at the table talking about some investments, like they were going to buy some options on Intel. I had no idea what they were talking about. So I went in on this. I said, look, I have $1,000. I want in on this. And so, we did it. One of the guys took my money, put it in his account, bought the options. And then 2 weeks later, they came back and said, here's your $1,000 back plus another $800. I was just like, so, a bunch of alarm clocks and bells went off in my brain. It's like, okay, I worked, at a crap job all summer and managed to save $1,000, and now in 2 weeks, by doing pretty much nothing but having an idea, and I made almost the same amount of money. And so I got hooked on investing and trading. So from there, went to college. I traded through college. I actually traded this girl that I met, her financial aid money. Luckily, that worked out well. We're married today with 3 children.
Oh, that really worked out.
That did work out, yeah. And then from there, I worked as a financial analyst for about 4 or 5 years. But during that entire time, I really liked the idea and the freedom of could I just work in the stock markets and create a living from that? But I didn't want to be a stockbroker. I didn't want to run a fund. I also wanted the freedom associated. And so from there, I actually ended up quitting my job and then trading full time. And when I say trading, what I learned is that when I was working full time, you can't sit there and day trade.
Right.
And day trading is actually the worst thing you could ever do because psychologically you can't handle it. Right. Most people can't handle it, but really it's the commissions. They eat up and destroy everything.
Right.
So swing trading, where you do a trade you do a trade and then 3 or 4 weeks later you take it off, is great. There's not a lot of, you're not generating a lot of commissions. You're catching the bigger moves.
Where's that term come from, swing trading?
It's so the main things are like scalping, day trading, swing trading. Position trading and investing are kind of the 5 kind of things. And the swing trading is just the idea is like you're just kind of catching the swings in the market. They kind of ebb and flow and you're just trying to catch those waves.
What's scalping?
Scalping is, so you're taking like 4 espresso shots and you're sitting there trying to catch, like 50 cents in a stock. Like Google, Google at 1,000 and sell it for $1,000.50.
Right.
That's a lot of work
right.
for not a lot of reward, and it's mentally exhausting.
It sounds like it. I remember when I was running my companies, and I way back when, and day trading was just kind of like a new thing. And I can remember, there's an adrenaline rush to it and excitement.
For sure.
But then I found myself, focusing on my trades and not focusing on my company. So I said, whatever money I'm making over here, I'm more than losing over here. So that didn't work out so much for me. But the swing trading sounds like an interesting approach.
It is, and it's a nice makeup of catching big moves. It's kind of like the juice is worth the squeeze.
Right.
You do the research, you find the setup, and then you're able to do it while you're doing other things. And during that time, I also formed a company called Simpler Trading. And we've been an Inc. 500 company, and what we do is kind of, and I actually really like the business part of it too, but it's just showing people strategies.
Right.
In terms of doing that.
So part of your business activities is training other people, not just doing it yourself.
Sure, and at some point what was happening is I was sitting there and I was trading, and I kind of missed the camaraderie of work.
Right.
So ended up just kind of learning and starting a company on my own, and then just kind of growing it to where it is today. But the main thing with that is just really, it was an idea of, growing a business is kind of a trade as well.
Right.
You're starting off and then you're kind of adding value to it. But what I love about it is that you have to provide value, to people, or it's not going to work.
Right.
But what I also found is that by teaching the strategies, it has actually put us on a path of being able to kind of find better ways to do it. Right. So when you actually have to explain something, you're forced to really know what you're talking about.
Isn't that something?
Isn't that something?
So there's, my life, started my professional career as a chiropractor and ended up in several entrepreneurial enterprises over time. And I know with a lot of my colleagues or dentists or other types of professionals, CPAs, medical doctors, et cetera, I know that they have after 10, 20, 30 years of practice, a couple of things come up. Number one, they might be getting bored. Number two, they've accumulated some real wealth, but the idea of saying, well, if I wanted to retire, eating into that principle over time is, could be scary. How long am I going to live? What do I leave my kids? So is there a strategy for that type of let's call them a professional or somebody who's worked in a career and did fairly well for some period of time, that they can take what you do and apply it to their lives?
So there's a couple of things that I've watched with this, and I've seen a lot of clients go through a lot of different things, and whether it's a dentist or a doctor or an entrepreneur, and maybe they have a business and they've saved up a lot of money, or they've sold a business, and so suddenly they have this nest egg. And what happens is that when there's a couple of things, but the first thing is when the income stops. So some guy may get a nice chunk of money for his business, but suddenly he doesn't have income, and their mind changes after about a year. They start getting scared because they start focusing on protecting what they have, which is a completely different mindset than expansion and things like that too. But what I've seen in a situation like that, where if you have, say, a dentist or a chiropractor or a doctor who is like, okay, I've got this money, I want to keep my practice, and I'm just kind of bored. The two things I've seen a lot of people do is, one, they may do some, say, small investments in other businesses, $50,000 here, $100,000 here. And then also just kind of getting into the financial markets in a way that allows them to continue their practice. So obviously not day trading, but also gives them something to kind of look forward to. It's exciting, like when they wake up, okay, I've got these call options on Google, is it working out, and things like that. And that's been a good mix.
What's the learning curve for somebody like that? Let's say that they have some, they get guys like you that are friends that kind of maybe work in that industry and they know a little bit about it, but now they want to get serious. What's the learning curve before they're effective?
So here's the interesting thing with trading is that the thing about trading that's very, let's see, I guess it's if you played a video game where you're flying a plane, you would not in any way, shape, or form expect that you could go hop into a 747 and fly it to Paris, right? Well, what will happen though is that it's so easy to set up a brokerage account. And now all of a sudden you've got your computer, here's your mouse, you're in your bathrobe, click some buttons, and you kind of have a 50-50 shot of making money or not. So it seems pretty easy. But the difference between creating a consistent income from the markets and that is that over the course of 100 trades, did you make money or not? So if you've got the skill set and the mindset over the course of 100 trades, you're gonna have winners and losers, but you're gonna generate income from that. So to learn the basics, this is how the markets work, these are the strategies that I need to know, 3 months. The hardest part though is the mindset part where, as an example, the market rewards bad behavior. So you've got $10,000 at risk, it's not working out, you're supposed to cut your losses, you don't, and the market comes back and you have a winner. It's the worst habit because now what's gonna happen is every time a trade is not working out, I'm just gonna remove my stop. And it only has to, 19 times out of 20 that can work, but it's the 20th time that wipes the person out. That's the flash crash or whatever it is. So it's those mental skills and having the discipline to stick to the plan.
Yeah, so it is a lot of discipline that there has to be a plan. And you find that it can be when you have these sort of rules, and if you stick to the rules, there's going to be a payoff, routinely over time.
So what's interesting is that what people will end up doing, or the mistake that they'll make, is that they're looking for the killing. Because once in a while, especially if you're doing something leveraged like with options, we've done things where you put $10,000 into a trade and you wake up the next day and it's worth $50,000 or $60,000, and you think, wow, I want to do that again. Well, if you're seeking for that, that's the thing, is like it's like if you're searching for it, it ain't gonna happen. But it's the idea of having a fixed amount of risk in mind, and then just kind of being able to follow your plan like that. But the idea is that when you have we've gone through and we do back testing on different things, and so if you find something that has a 75% probability of success, so let's say you're playing blackjack and you've got a 75% chance of getting a blackjack for the next 100 hands. What are you going to do? You are just going to bet the next 100 hands because you know that at the end of that you're going to have won some money if 75% of those are going to be blackjacks. But the interesting thing in trading is that just because there's a 75% probability of success, it doesn't mean you always have 3 winners and a loser.
Right.
3 winners and a loser. You could have 10 losing trades in a row.
Right.
You know, because over the course of 100 trades. So that's what messes people up. And so the idea is you have to think in terms of, here is a setup that I have, and now I'm going to apply it to like the next 25 trades. And at the end of 25 trades, did I make money or not?
Right.
Everybody gets so caught up in the current horse race.
Right, and that's probably the tough part, you know, is the kind of, I guess, the peaks and valleys of emotions when, oh well, you know, I had a great trade today, but you know, I have 3 losers in a row, and they start to, you know, get shaky. And then, you know, I almost think of this if I'm sitting at the blackjack table. Then, you know, it's getting late. It's been, you know, a long night. Now I want to try to make up. You know, you start like really going outside of your structure just because psycho-emotionally, you know, you're not following rules. You're starting to get into emotional habits instead of structural habits. So does the same thing happen with people in the market?
1,000%. So what'll happen is you have a plan. You get kicked in the face 3 times in a row.
Right.
And it's so easy for the brain to go into survival mode.
Right.
And it just overwrites everything.
Yeah.
So what happens in that case is, the best example I can think of is, okay, if you're 5 years old and your first encounter with a dog was that it was a friendly Labrador.
Right.
The rest of your life, the moment you see a dog, you're gonna be like, oh my gosh, you're gonna have warm feelings to that dog.
Right.
Now, if the first time you encountered a dog, it like ripped your arm off, you know, the rest of your life, anytime you see a dog, you are gonna be scared to death.
Right.
So how that accounts to trading and investing, or really any kind of financial investments, is that if you have 2 losers in a row, now your mindset is the same as if you'd just been attacked by a dog. So you're defensive, you're fearful, you know, you're on guard, and you're gonna be more cautious. And when you take that mindset, that overrides your trading plan, it screws you. And the same thing if you have 2 winners in a row. You're enthusiastic, you're euphoric. I'm a trading god, I can do anything. And so you take bigger risks, which it's not following your plan either. And so the idea is that on the next trade, you have to have a beginner's mindset. It's like when you go up to a slot machine and you put a quarter in. You don't really have an expectation that you're gonna win or lose. You just wanna see what happens.
Right.
And you have to have that same mindset on every trade that you're doing in order to stay consistent.